Thank you for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin and looking at the 20-week moving average. If you guys like this content, please subscribe to the channel and turn your notifications on, and check out the Telegram and Discord channels in the description below. So the reason why we're making this video is because historically, whenever Bitcoin, what it's doing with respect to the 20-week moving average is often a good indicator of the more macro level view of the market. So if we were to look at the macroscopic picture of Bitcoin price history, these yellow lines here are the halvings. But you can see that any time that we're holding the 20-week moving average as support, we're pretty much in a bear market or a bull market. And you can see that in this first cycle over here, we were holding it as support on the way up. We were holding it as support on the way up here. And then in this last market cycle, let me go ahead and zoom in. You can see that we were holding this 20-week moving average as support on the way up. So you can see, it was held here for many weeks. We came down to it and held it again. Every correction went straight to the 20-week moving average. Even this wick here went all the way down to the 20-week moving average. And once we broke that 20-week moving average, is a key indicator to get out. If you're not already out of the market, then typically this is a decent time to really start thinking about selling some of your investment. Now, it doesn't mean that the price can't go up clearly, but just based on historical data, once the 20-week moving average is broken like this and it begins and the price is holding is up against that 20-week moving average, and the 20-week is holding it as resistance, then the price action is typically not good for an extended period of time. And this was this has been the case in the past as well. Breaking this 20-week moving average historically leads to a long bear market. Now, the interesting thing is back in 2015 and 2016, we tested this 20-week moving average. So we came up in March, tested it, and we were rejected. This was March of 2015. We broke the 20-week moving average in June of 2015. So if we were to take a measured move from, let's say, the first time we broke the 20-week moving average to then when we actually held it as support. So we actually held it as support in February of 2016. So it took around 33 weeks or 231 days. But you can note that during this time period, we came above the 20-week and then ultimately we fell below it. Now, if we fast forward to let's say present day, sorry about that. So let's fast forward to present day. What happened? So if we take another measured move, we broke the 20-week. And ultimately, we're able to stay above it for about 182 days, but we were not able to get back above it after it broke support until 301 days, so 43 weeks. So the difference here is 33 weeks versus 43 weeks, or 231 days versus around 300 days. Now, we actually have not confirmed I don't think that us popping above the 20-week yet has confirmed that the bull market has started. I think what really needs to happen is we need to hold it as support. And what do I mean by that? So you can see back in 2016, once we were above the 20-week and basically right on that line, we held it as support and didn't really stray too far from it for 16 weeks. So about 4 months, we were just on that 20-week moving average, and that ultimately led into a one of these little mini bubbles where we came up from $400 up to almost $800, and then corrected right back down to the 20-week moving average, and then we rinsed and repeated this for the entirety of the next bull market. So if we were to look at a move from let's say we were to take a measured move from holding the 20-week as support to then when Bitcoin actually had its all-time heights of $20,000. So we held the 20-week as support, and we hit an all-time high we hit the current all-time high, so the peak, after around 97 weeks. and it increased from where we held the 20-week as support by about 5,000%. So what would happen, assuming this is the beginning of holding the 20-week as support? Well, if it were, this is just obviously very hypothetical, but just for the sake of being complete here, I just want to show what would happen if we mimicked exactly what we did over here. And I don't think it's going to be exactly mimicking the last cycle because it already does look somewhat different. So if we were to take a measured move and we went out, let's say we just went out 97 weeks, and let's suppose that it went up around 5,000%. So basically saying, what happens if we do the exact same thing as last time? So that actually would put the price of Bitcoin at $424,000 almost, and it would put it there in 2021. So if we were to look at the time, you can see that this would be corresponding to around November of 2021. Now, if many of you follow my channel, you'll know I don't really think that we are going to see a price increase that remotely resembles 5,000%. What I would anticipate more so would be something like, maybe something like between 1,000 and 1,500%, somewhere in that range. And I also am not convinced that it's going to happen over 4 years. I think there's a case for saying that it might be lengthened out to maybe 5 years. And if you look again, I mean, this is just basically reiterating what I talked about in the last video. If you look at the time after the halving to when Bitcoin had its peak before going into a bear market, you can see that it's getting further and further away from that halving. So if we were to take a measured move, again, this is just reiterating the last video. You can see that this time, from the first halving to that peak, it took around a year or 52 weeks, or plus or minus a week or so. I'm not zoomed in that well. This second halving to the peak took around 73, 74 weeks, something like that. So you can see that in terms of relationship with the halving, it's taking a longer time to reach that peak price. So, this is just speculating that we would continue this trend where I don't know exactly how long it would take, because you really can't make a great trend or create or understand a trend with only 2 data points. But if you can imagine that if we were to come out something like this, then it might put us in, say, 2022 before the next peak. So it's just something to take into consideration. Now, I do want to talk about some of the differences here. So, back in this market cycle of 2015, 2016, 2017, one of the things you note is that when we did hold the 20-week moving average as support, the 20-week was actually increasing. Right now, the 20-week moving average is decreasing, so it's not exactly the same. And one of the reasons for this is because once we crossed the 20-week in the current market cycle, we went up, significantly. The price went up. Let's take a measured move, but let's look at date and time. So from the current market cycle, we went up around, 300, somewhere between 250 to 300%. Once we held the 20-week moving average as support to the local peak. In the last market cycle, once we saw ourselves breaking that 20-week moving average, we didn't really go nearly as high. We only went up, maybe, I should probably zoom in here actually so I can get a much better reading. Let's go ahead and zoom in. So in the last market cycle, once we broke it, you can see that the price didn't really go up that much. It went up maybe 30% or so, and then came back down below the 20-week, then popped back above it, and then held it as support. In this current market cycle, we went up about 200 or 300%, and it is one of the reasons why you see the 20-week moving average behaving the way that it is. So what I'm going to be looking for in the next several weeks slash months to gauge, the overall market sentiment would be to say, can we hold this 20-week moving average as support? Can we stay on it? And if we can, I think that will bring a lot of momentum back to the market. So you can see we've popped above the 20-week moving average. If you're curious as to what the 20-week moving average is, it is currently around $8,300 or so. So that's what I'm going to be looking at. I'm going to be looking at not wicks below it. I'm going to be looking for us to stay above whatever that 20-week moving average is for the next, say, 2 or 3 months, and just continuing to stay above the 20-week moving average. You can see that during this last sort of mini bubble, once we came down to that 20-week moving average, I remember talking about how this was a key support region, or a key support region, assuming we were in a bull market. And once we broke that 20-week, you can see we fell. We basically fell through the floor. We went straight from $10,000 to around $8,000. Now the 20-week moving average is around $8,000, or just north of it. So we have a new phase of testing. We're going to see if we can hold this moving average as support, and if we can, then I think this will start to see a fundamental shift in the momentum in the market. If we cannot hold it as support, and you see us drop below the 20-week moving average, and do something like where we come back down to it and just drop below, then we're basically kicking the can down the road for a bit, and we would ultimately have to test it again. So you can imagine it would come down here. I should probably change this to a different color so you guys can actually see it. And then we would ultimately maybe come back up and test this 20-week moving average. But obviously we don't know that this is going to happen. I mean, it's clearly possible that we might just hold this 20-week moving average as support, and hopefully we do, and hopefully we really start the beginning of this next market cycle where we see investors come back to the market. Now, I do want to remind everyone that this is not financial advice. This is just how I look at the markets. I really do look at that 20-week moving average in terms of how I balance my own portfolio. When Bitcoin is below the 20-week moving average, I definitely have a lot more Bitcoin than any other coin, and I still would have more Bitcoin than any other coin when we're holding it as support. But I think it does bring some rejuvenation back to other coins. Not necessarily, all of them, because there's so many now that it's just getting out of hand and ridiculous. I think this next market cycle is going to be more for, coins that actually have real world utility. Enough people have been burned in the past by, these schemes where you just go print you mint an ERC20 and you make a WordPress site and launch that, and for various amounts of money. And I think a lot of people have moved past that. At least I hope they have. And I hope that the market tries to discover the actual utility of the coins and places value based on what coins actually are going to do something, and are not just saying what they're going to do. So, a word of advice, don't just throw money at any random coins you find. Just do your own research. If it's a coin that you think has a good team and a good idea, then there's you can do what you want with it. But don't forget that Bitcoin is the king, and in my opinion, not holding Bitcoin is just not a wise idea. But that's just my opinion, and I know many people would disagree with me. So I hope you guys like this video. I did have a little quiz in a previous video as to anyone could guess my dog's name, and you can actually see her. She's like right over there laying on the bed. But no one's gotten it right so far, so I will give you another hint. It is from a city or / town in Uganda. So look at a map, look at Uganda, see if you can figure out what her name is, and comment that in the description below. So again, if you guys like this content, please subscribe to the channel and like the video, and check out my Telegram and Twitter accounts in the description below. All right, guys. Bye.